wanting to know, with the increasing focus on customer due diligence and beneficial ownership requirements, what measures can companies adopt to ensure accurate and reliable information gathering? Thoughts on that? We'll start with Stanley and then maybe Uday after that.
Well, one of the things that they can do is try to determine exactly what their own, depends on where they're located. Let's start with that. If they're in the U.S., they have a slightly different set of standards than what might be found overseas. But if we're talking about customer due diligence, then Uday talked about a quick review he did on the internet of his people did on the internet for looking at a customer. The fact is that there's a huge amount of public information available to begin with. One of the difficulties is getting information from local law enforcement around the world through Interpol or other organizations as to who they're looking at and why. Beyond that, a deeper questioning, a more effective questioning, a different kind of questioning, because especially if we're virtually onboarding, we don't know who we're onboarding. And if it's face to face, then cultural issues come into play. It's important to train the people who are doing the onboarding to make sure that where there are personal relationships, they're not allowing those personal relationships to affect how they're treating these customers or how they're considering them for onboarding. From the other side, with ongoing clients, there needs to be a continual review of the profile of those customers. In my business, I came in to this industry doing a particular type of work, which we decided not to do anymore. And so I went to my banks and I changed my profile and told them to expect certain things, and that our banking records at the bank would show exactly that what we told them we were doing, we are doing. So looking for those discrepancies between what the customer says they're doing and what they're actually doing is very important. Uday?
Yeah, absolutely. I think you hit the nail on the head. I've always seen a little bit of a challenge or a tussle between relationship managers or people who are responsible for business development and trying to get the clients in, right? So they're kind of always in a rush to, get information from the client and try to get them through to approval and get them transacting, because the incentives are structured in a way that go higher when more customers are onboarded. On the other hand, there's kind of the flip side of that, where compliance needs to make sure that the customers are screened for sanctions, adverse media, any PEPs are identified. So they have all these guardrails that are built into the compliance process, and that sometimes can get very challenging and very tricky. And in the example that I mentioned, if compliance doesn't have means to independently assess, information that has been collected by the relationship manager, right? Sometimes it gets tricky, and it also can lead to the risk that the bank doesn't really understand fully the customer, their beneficial owners, the type of business that the customer does, and all of these different things. Stanley also mentioned something interesting, which has come in the last few years, is virtual onboarding, right? So back in the day, you had customers walking into a branch, supplying information. There would be the opportunity to talk to the customers face to face. A lot of the KYC and onboarding processes, including ID verification, has moved to a digital platform. So that creates its own unique set of challenges of how do you make sure that you are able to get a really good picture of who your client is if you've never met them. If all they're doing is submitting the information to a portal or through a system virtually. Obviously, there are technologies that have been introduced in the last few years that specialize in digital onboarding and digital KYC verification. So there are all these nuances that I think are very key to consider as part of the risk-based program. So I don't know if that addresses the question adequately, or Stanley, I don't know if you have any other thoughts on
I
that.
just want to know if you would agree with the analogy, and you don't have to agree, of course, that there's been a traditional tension between the retail side of every bank and the lending side of the bank, right? With information and how they respond for a loan request. And I think that when a business is asking for an account at a bank, and when a bank is conducting business with a business or a person, there's another dimension of tension that's occurring. This time it's between compliance and customer relations. And I think that the two things have something in common. Would you agree?
Oh, absolutely. I think you're spot on that, Stanley.